Well, thank you everyone for coming. This is our first Future of FinTech event, so we're happy to host all of you here today. I think I've been to a lot of insurance conferences in the last few years, and I think one of the things I'm most proud of in putting together this event is just sort of our relentless focus on the content. I think you're going to hear from a lot of great speakers, both executives and innovators who are pushing the industry forward. You'll also make meaningful connections, hopefully, amongst yourselves. So please don't hesitate to reach out to any of us at CB Insights if we can be helpful to make this a worthwhile experience for you. I just want to take a brief second to introduce myself. So I help manage our financial services research team at CB Insights. A lot of the material you see both at this conference as well as the conference tomorrow, Future of FinTech event, was put together by our team, so I'm very proud of them for that. We also do a newsletter covering trends in the insurance industry. It's in the tech and innovation side of things, about bi-weekly now, which goes out to about 40,000 subscribers. A lot of the material you'll also see in this presentation is from that, so please, if you're interested, please sign up and I can help you do that. So today I'm going to cover 4 main areas, take a bit of a 360 view based on a lot of the content you'll hear today from the speakers who will dive in a little deeper. But there's 4 main things I want to talk about today, and we'll be talking about the P&C industry. The first is sort of, why are we seeing change come to the P&C industry today? I think there's a lot of reasons for that. I'll dive into a couple. 2 is, how do you think about innovation entering the P&C industry today? And we'll talk about both enabling technologies as well as challengers to the industry. 3rd, we'll cover sort of why speed is more important than ever to the P&C industry and incumbents in the industry. And 4th, we'll talk a little bit about how to prioritize both threats and opportunities in the industry. So let's just take a step back and look at some context. I think when we look at P&C today in the US, it's about a $617 billion business by net written premiums. Obviously split between both personal and commercial lines, and in personal lines, about 3/4 of that is personal auto, private passenger auto, and about 26% of that is homeowners insurance. So just taking a sort of market landscape of what that looks like today. Why are we seeing change happen in the P&C industry today? Why is it sort of set up for massive change? I think there's a lot of reasons for that. I'm not going to go into all of them, but I did want to talk about 2 briefly, and one is sort of the nature of the industry today, which is becoming extremely competitive. And the second is that growth opportunities for incumbents in the industry will also require sort of new approaches to how they do things, which is not always easy to do. And I think that's something that we hear a lot about from our insurers that we work with. So if you look at the competition side of things, P&C industry is becoming more competitive every single year. It's about 280 less filers over the last 10 years than there were in 2008. And when we look at scale in the insurance industry, P&C industry today, about 71 carriers have net written premiums above $1 billion, and I think about 43 or so have about more than $2 billion. So certainly scale matters in the industry, and we're seeing a lot of consolidation as well as the industry continues to get more competitive. I think nowhere is that seen more clearly than the personal auto lines business, where we've seen companies like Progressive and Geico take market share from legacy mutuals as well as other incumbents in the industry. And I think this is a change that seemed gradual, I think not too long ago, maybe in the last 10 years, but now feels very sudden as we've seen sort of this self-reinforcing cycle that's emerged where these writers are able to sort of use heavy advertising costs as well as maintain sort of lower cost structures and able to just continue to drive premiums in this cycle. More advertising, more premiums, et cetera, and keep cycling through. And that's, I think, a very interesting thing that continues to impact the industry today. And then when we flip over to growth opportunities in the industry, I think those are also areas where incumbents are very interested and have a lot of things and initiatives going on, but also will require sort of new approaches. I think when we look at small commercial, for example, which is frequently talked about as an opportunity, no shortage of sort of talks on the future of small commercial insurance at InsurTech conferences. Still today, if you look at estimates, it's probably about 5 to 10% is purchased through digital channels. But obviously, digital natives are taking over more small businesses. More than 60% of small businesses will be owned by millennials or Gen Xers by next year. So obviously, that requires a bit of a different approach to the market as well. Cyber insurance, which Andy just talked a little bit about, is also heralded as a big growth opportunity in insurance. But it's been bumpy if you look at the growth. We saw about 37% growth between 2016 and 2017. This past year, we saw just about 8%. So certainly, insurers have remained a bit cautious. The growth has been bumpier, I think, than some would have expected. And today, there's not too many big writers of cyber as well. About 15 carriers write more than $28 million of direct written premiums in cyber. So this is still an industry that's emerging and will take time to develop in terms of the growth and understanding of the risk as well. So what does that mean? Well, it means that we've also seen a lot of money and investment flow into innovation and the technology side of making things better in the industry. When we look at our figures we put out every quarter, we saw about $4 billion invested in 2018. This is up significantly since 2012. This is obviously global, and it's covering more than just P&C, but I think is indicative of sort of the initiative to look to innovate quicker, and I think this is an example of that. When we look at how the deals break down from that data, most of the deals now around the world are going to P&C companies. That's shifted a lot over the last few years. I think when we first started covering, I guess, the insurtech space, a lot of deals were on the health insurance side of things, ACA, and a lot of change happening there. Now it's largely P&C and obviously still a lot on the life side as well. But I think one thing to emphasize here, we'll cover mostly things happening in the US, but this is truly global. I think in Q1 we saw over half of all deals on the insurtech side took place outside the US, and I think that's an interesting thing, as well as a lot of the big multi-line carriers also look to expand businesses globally, and is happening as well. So how do we think about all these deals? Where is all this startup formation happening? Where is all this innovation happening in the industry? I think there's two, if you just break it down very broadly, there's just two main ways in which we're seeing it happen and play out. So we're seeing a lot of new enabling technologies. These are companies that are providing software, services to the insurance industry, both providers, as well as brokers and reinsurers, and also challengers. So also seeing a lot of companies become providers of insurance themselves or distributors, and we'll talk about both of those in the next few minutes. So when we think about the enabling technologies in the industry today, I think there's a few reasons why enabling technologies are a bit more powerful today in the P&C industry than they have been in the past. Many companies are leveraging all three of these sort of reasons, but I'm going to go into them a bit individually. So certainly the ability to use mobile differently, the ability to create and also access new data sources, and third, the ability to leverage advancements in artificial intelligence and machine learning. So I'll go through a little of what that looks like today, starting with mobile. So if you look at the personal auto space, for example, insurers have one technology that's made sort of advancement over the last few years is certainly the use of mobile photo estimating in the claims process, which has evolved rapidly in the US, where the number of insurers using virtual claims technology from a company called Snapsheet has more than doubled over the last 4 years. If you look at Allstate, which has developed their own technology through their mobile app, QuickPhoto, we've also seen immense change, right? I mean, they're now using about half of their insured vehicles are using their QuickPhoto claims mobile app. And this is you see sort of the brochure here they had for their driving claim centers. Many of those are now sort of going extinct, as well as field adjusters. So this is a change that's, I think, happening very quickly that sometimes can go unnoticed based on what we're seeing elsewhere as well. Another area where we're seeing mobile play a role is certainly in telematics. We're seeing a lot of interest in what's happening in telematics today. About 5% of North American drivers have connected car policies. We see the number of global telematics policies that are usage-based, about 9%, so still very low in terms of adoption, but a lot of promise as well, especially as we see more advances in mobile and how that technology will play a role in telematics. Zendrive, for example, is gathering a lot of data. They now have about $180 billion miles of data from drivers, not dollars. That'd be interesting. Although certainly wouldn't be surprising given the spate of venture today. But and Cambridge Mobile Telematics, who you'll hear from a little later today, is working with carriers like State Farm and Discovery Insure. And some of the programs have seen meaningful change. Discovery Insure, which is a South African insurer, for example, has seen 60% lower lapse rates. So certainly some change. State Farm's now advertising for their telematics drive policy as well. So certainly a lot of things happening there. And mobile is also starting to enter the property industry as well and cutting down on both time and cost. Companies like Hover now are using computer vision algorithms to basically generate a 3D model of a home just based on maybe 7 or 8 pictures. I think that can help claims adjusters and other parts of the P&C, parts of the home claims process. And we're seeing that another example of mobile in that industry as well. And then when we think about sort of the ability to create sort of new data sources and also access them, I think we've also seen a lot of companies built on this trend. For example, there's a lot of providers now today that are leveraging sort of two factors. One is the growth of availability of geospatial imagery data. You see providers now like Nearmap, which now have coverage of over 70% of the US population. You can see a lot of startups who are accessing their data directly. And also advances on the ability to use artificial intelligence to to analyze that data, and it's become a lot better in terms of image. So in 2015 was the first time we saw actually a deep neural net approach beat humans at the ImageNet challenge, which was a big deal at the time, and it's only gotten better as well. So certainly our companies like Cape Analytics and others are also built on this sort of trend as well. And then when we think about data, I think there's also companies that are creating new data that just wasn't maybe accessible before in a scaled way. So we'll hear from Safety Culture later today, which is a very interesting company. They're providing a workplace safety inspection app. They have about 450 million safety inspections a year completed on their iAuditor app. And you see the sort of number of companies that are now using the app through their bottoms approach, where workers are sort of accessing the app directly, free, and then bringing that into their company. He'll talk a little bit about some of the insurance partnerships and now they're getting into the industry as well. But I think what's interesting in this regard is we're also seeing enabling technologies not just improve sort of the insurance side of things, but also actually make businesses better. And I think that's something insurers are more and more interested in. I'll talk about an example today, but they're working with a retail customer that saw about 8% of reduction in wastage costs, and they saw their inspections change from quarterly to daily or weekly. And so just driving that change really improves the nature of the risk for businesses. I think that's a theme that we'll continue to touch on today as we think about the role of technology in the industry. And lastly, the ability to leverage advancements in AI and machine learning. Companies like Shift, for example, are aggregating claims data from the insurers they work with to build better models aimed at combating insurance fraud. So they signed their first customer in 2015. Today, they're working with 70 insurers. And of course, a model like this only works if you're getting the data in and improving it. So I think that's something that we're seeing some companies have success with as they are able to do that and improve their models and build a better business because of the network effects that come with it. So that's sort of what we're seeing on the enabling side of things. I think when it comes to challengers, we're also seeing a lot of innovation. I'll talk just briefly about some of the things we're seeing on that side of things. Before I do that, I want to just talk about one enabling factor of a lot of the new challengers in the industry. Why have we seen a lot of startups multiply to become providers or distributors of insurance? And I think insurance structuring was a big deal. I think when we look back a few years ago at our coverage, right, a lot of the talk was about P2P insurance. This was a big theme in the media. A lot of prominent startups thought about this, but now have changed their approach quite a bit. And I think one interesting data point to look at here is Wikipedia article revisions, right? So if you look at P2P lending, the number of times it's revised and otherwise showing more updates are happening to the industry, that's gone down significantly for both P2P insurance and P2P lending. But I think that's one thing that's interesting. But when we look at the flip side of that, we did see, I think, a meaningful change come from the emergence of all these digital managing general agent startups. And that's enabled by people like Andy at Munich Re Digital Partners, as well as many others. But we just never saw this model of sort of the venture-backed managing general agent in the insurance industry in the past. There were examples certainly like Esurance, which was set up in 1999 as a MGA of Argonaut, and a few years ago we had companies like Metromile, which started as an MGA, Climate Corp, which was later sold. But now today, obviously, this is a very prominent model. I think when we think about insurtech, a lot of people equate this with what we're seeing in the industry today. So I think it's interesting to think about that as an enabling factor as we move forward. But when we think about challengers, they're really attacking on a number of vectors as well. I'm just simplifying this in the presentation, but obviously it's much deeper than this. But certainly there are some factors that have helped challengers sort of attack incumbents across different vectors. The use of cloud and mobile technology, how has that changed the service delivery, for example, of obtaining insurance, use of data and AI, similar to what we've seen in enablers, and different novel customer acquisition, right? If you're not able to accrue customers and build a scale business, it's hard to become a meaningful player in the industry. And I think customer acquisition is one area where we've seen startups look to innovate much quicker than incumbents. So let's talk a little about some of those factors. In mobile, for example, we've seen Root use a try before you buy approach to telematics. It's growing very fast, right? In 6 quarters, they've gone from about $3 million in direct written premiums, about $88 million in Q1. And I think one reason for that is they've changed the delivery mechanism for obtaining this auto policy, right? They're asking you to test drive for 2 to 3 weeks, and then they're offering you a potential discount upfront after that. a lot of telematics policies today are sort of bringing the discount after the first policy period, and it's just a bit of a friction for consumers. I think that's enabled Root to move very quickly, and also leverage other aspects of what we're talking about, like customer acquisition, where they have a very novel referral business, which has brought in well over 40,000 drivers. So I think there's a lot of different aspects here today, and I think one is how are some of these technologies changing the very delivery, and obviously we'll talk about underwriting as well, of insurance as well, but certainly that's one example. When we think about use of data and AI, I think there's a lot of examples you can point to. Cyber insurance, which we talked about a little bit before, we are seeing some early companies look to change how that's done as well. Coalition is a very interesting company where they're taking a more dynamic approach to both pricing the risk as well as providing coverage, where they're looking at the company's specific cybersecurity posture, and they're enabling those companies with free tools to help improve their security posture, like ransomware protection, Cloudflare, other things, and that bringing sort of this loop again into how they think about underwriting and pricing their insurance. So interesting examples in areas like cyber, as well as home. Andy talked a little bit about Hippo, I think doing very interesting things where they're gathering a lot of data sources, whether that's, and thinking about very up-to-date data as well, right? So can you look at satellite imagery from different points of time? How do you leverage all this and build the experience that's much better than what we see in the industry today? For example, just putting your address into Hippo, they're already pre-filling a lot of the information that you need, and that's just makes a sort of experience a lot better than it was in the past. And then on the customer acquisition side, we're seeing a lot of things. I don't want to go into all the different examples of innovation we're seeing on the customer acquisition side of things, but go into one at least. The Next Insurance, you'll hear from Guy a little later, is thinking about this a different way, where the way they're trying to grow their business in the small commercial space is to go sort of class code and vertical by vertical, as well as line of business by line of business, expand outwardly that way. And as they think about sort of ways in which they can acquire customers, one of the things they're doing, which is still a bit early, is partnerships, affiliate partnerships, where they're looking for different websites or platforms that are relevant to specific small businesses, like maybe a membership or professional association for photographers, or sites that are relevant to specific types of small businesses. And I think over time we'll see this change, not just for Next, but for the broader industry as well. Companies that are built on cloud and APIs, as they grow and expand their breadth of coverage, I think that will enable bigger partnerships to take place that might be a sort of a generalist financial services firm or payroll providers and other things. And I think that's something that is yet to take place, but we're looking towards in terms of that customer acquisition by some of the challengers in this space. So why do incumbents need to act faster today? And again, there's a lot of reasons for that. But if we take the sort of 360 view of all the challengers that are entering the industry, there's a lot of unbundling of lines of business of companies, right? And I think this is something we've seen take place in the fintech industry. We'll talk a lot about this tomorrow, actually, when we think about the banking side of things. But a few years ago, we published a graphic on Wells Fargo's homepage. A lot of those companies maybe aren't necessarily going to make it, but some of them have grown to quite some scale, and I think and have millions of customers. If you think about a company like Robinhood, which is a commission-free trading app, they've grown to about 6 million brokerage accounts in 4 years. E-Trade today took about 4.9 million brokerage accounts, and they've been around for 37 years. So when you have that, and being able to then add other products that make the customer stickier as well as build value for the customer, I think that's an interesting thing we're seeing in the broader financial services industry today. And I think it's still early in how it'll play out for insurance. Certainly, venture capital and is a sort of natural selection process. Not every company that we talk about or see today will be around in a few years, but some will. And I think as they think about going for a specific product line today, we'll see how they think about expanding in the future as well. And certainly, it's not just insurers or challengers that the industry needs to be worried about. I think we're also seeing big carriers, direct writers, think about areas like small commercial differently, where we see players like Progressive and Berkshire Hathaway, who changed the game in personal auto, are now also focused on the opportunity where a lot of incumbents are thinking about, like small commercial, thinking about policies that combine a lot of coverages in one, or even thinking about writing more direct. So I think there's a lot of change to come here, and that's another reason to maybe think quicker, as we've seen what happened in personal auto. And I think as we think longer term, and much longer term maybe, depending on how you think about things, I think there's also reasons to be thinking about things a lot faster today. So when we look at our patent data, for example, and search out keywords of different terms, even insurers, like in State Farm and some of the big insurers, are preparing for this autonomous future based on their patents. And I think that's just another signal of where things are going. So how should incumbents sort of prioritize threats and opportunities? And I think this is, again, some broad advice, but we'll talk to some of it. I think one is to understand that the new entrants today in the insurance industry aren't limited to just insurtech anymore. I think a lot of the focus over the last few years has been on insurtech startups. I think that's changing quite quickly. And there's a quote here from Warren Buffett at the recent Berkshire Hathaway annual meeting about Tesla's potential entrance into the insurance industry. And no matter how you think about it, whether they'll be successful or fail miserably at this, I think the bigger sort of, if you separate the forest from the trees, is that auto companies are getting in the insurance business. Who else can now get in or is thinking about building a business or getting into the insurance industry? And I think that's changed a lot and will continue to change over time as we think about things. And a big reason for that is that the control of the customer is changing. And I think that's where insurers should be very focused. If we look at 3 examples, Gusto, for example, now works with tens of thousands of small businesses to process their payroll as well as other HR automation. How do platforms like that eventually think about how do those work in the P&C industry today? Right now, working mostly in workers' comp or in benefits, but I think we'll see bigger platforms like that have a bigger role to play as well in the insurance industry. Blend, who you'll hear from later today, Nima, their CEO, is here with us, processing over 230 billion in mortgage loan applications a year, which is significant scale. These are new home buyers. And so, they just launched their home insurance brokerage, and we'll talk a little about the decision to do that, moving it closer as mortgage gets more digital. What are the ways in which home insurance will become more integrated in that process? Credit Karma is another interesting example here. I think of an auto hub, which they've scaled to, I think, somewhere around 14 million users, where they're connecting the DMV and giving their sort of loyal users their interesting information, right? Whether that's estimates of what they should be paying for car insurance. How does that play a factor in insurance distribution in the future as well? So these are, I think, things that there's numerous examples across the industry that insurers should be thinking more about as we think about how the game will change over the next few years. Another thing is also not just to copy I think the startup playbook. This is across all financial services industries. We see this numerous time and time again. In wealth management, for example, we see a lot of incumbents say that robo-advisors won't work. The advisors won't use their robo-advisor technology. It's more of a acquisition tool, not a business. We see this in the insurance industry, where a lot of companies are launching digital renters insurance businesses, and we also see it in banking, right, where Fin, which was a millennial-focused digital banking app that they launched last year, actually just shut down this past week. And why was that? Well, I think it's because understanding the vectors of where challengers are attacking and versus what they brought to the table maybe was a bit misaligned, where most of the users were being were cannibalizing, right, existing Chase customers, unable to compete on some of the features as well as rates offerings. You see a lot of high yield savings accounts used by companies today, and maybe differences there. So I think these things are interesting. I think not just sort of copying that startup playbook and thinking a lot more about what are they doing well, what are they not doing is the bigger takeaway there. And lastly, when it comes to a lot of the enabling technology, I think it makes a lot more sense to prioritize those trends and areas of focus. So today, it's hard to keep up, right? There's companies that are doing commercial data automation. There's companies that are doing chatbots, conversational AI. There's companies that are doing cyber risk analytics or weather-related analytics products. So it's hard to figure those out. I think one way to do that is just prioritizing. We've come up with a framework that we hope will help do this, and our analyst team has been putting out reports on different industries to cover this framework in those different industries and prioritizing some of those emerging tech trends. We look at this in 2 ways, and a lot of data points that we're aggregating on our platform to do this. One is sort of industry adoption, and the second is market strength. And across those 2 dimensions, we plot some of these trends and where they're happening today, and some of the quadrants we put them in. And so in the P&C space, I think what's important to keep in note is that this is ever evolving, right? Technology is not sort of this static, it's not just a point in time. There's always evolving trends and technologies that will impact the industry. And I think that's the bigger takeaway from this. And I hope you enjoy the rest of the conference. I just want to thank everyone again for coming. That's all we have for you today. But if we can be helpful, please let us know. And thanks again.